Dividend Aristocrats are a great place to invest when you're wanting long-term passive income, because you get companies that have been proven to grow their dividend year after year after year for at least 25 years in a row. And when you think about what has happened over 25 years, you got 9/11, you got the great financial crisis and the recession that followed, you've got energy crash of 2018, you've got the COVID lockdowns, and lots of other turmoil over that period of time with wars and rumors of wars, war in Russia, war on terror, all kinds of trade wars, et cetera. And so, inflation, et cetera. And so these companies have weathered all of that. And they've proven to be very resilient, committed dividend growers. And so you're going to get not only what your current yield is, but you can feel fairly confident, again, that the business model, again, as long as management doesn't make stupid decisions and some really crazy black swan doesn't come out of nowhere, that income is going to grow year after year, and in many cases at a rate that beats inflation. And so it's a very low risk way of going about building a dividend income portfolio. In today's video, we're going to talk about 3 dividend aristocrats that I think are pretty attractive buys right now, especially if you want an attractive dividend yield. Before I get into these dividend aristocrats, if you could please like this video, I'd greatly appreciate it. Thank you very much. Okay, so the first dividend aristocrat that I like is actually technically not a dividend aristocrat because it's a limited partnership or an MLP, but it's grown its distribution for a quarter century every year for a quarter century. So that makes it meet that basic qualification that matters to me about it being a dividend aristocrat or not. And that's Enterprise Products Partners. Now, you may have heard about this before if you're a frequent viewer of my videos, but it's one that I like. I can't talk enough about it. It's ticker symbol EPD. Has an over 7% yield. It's about 7.25% distribution yield. It covers that distribution about 1.7 times with its distributable cash flow. So it's very well covered. Generates very stable cash flows due to long-term contracts on most of its assets. That makes it almost utility-like in nature. And this has been evidenced by the fact that it's generated double-digit returns on invested capital year after year after year, even during the COVID energy crash, the 2018 energy crash, et cetera. And that's really what's fueled its consistent distribution growth. Management is some of the best in the entire midstream sector. In fact, Morningstar in a report on EPD recently said that while the rest of the sector is playing checkers, EPD's management has been playing chess. And they built a wide moat business model. Morningstar says that they have a wide moat because of their well-positioned, fully integrated asset portfolio. They got a good position in the petrochemical space, and they've got other midstream assets that are just very high quality in nature. They insiders own about 1/3 of the equity, so that tells you that they are very well aligned with us, the unit holders, and we can expect them to act in our best interest, and hence why they've been so consistent with growing the distribution. EPD also has the midstream sector's highest credit rating, A- from S&P, has a very low 3 times leverage ratio that may even get lower in the future as they have a large growth pipeline going on right now. Once those projects come online, their EBITDA will take a step size upward, causing their leverage ratio to come down, also bring up their free cash flow a lot, give them a ton of flexibility, both from a leverage capacity as well as just cash flow capacity to be able to increase the distribution, pay out a special distribution, buy back units, or make an acquisition, or some of all of the above. And so a lot to like about EPD. They're growing their distribution at about a 5% annualized rate right now and should do so for the foreseeable future. So again, what's not to like there? Okay, before I get into the second dividend aristocrat that I would buy right now, if you could please subscribe to my channel, I'd greatly appreciate it. Thank you so much. Okay, so what is the second one? I think Realty Income is a pretty interesting opportunity. Sure, I understand it's not done great recently compared to many of its peers, and it's large. Some say it's going a little bit out of its circle of competence, but it has some attractive opportunities. For example, it recently has really been moving into Europe aggressively for growth. And eventually, management has even mentioned that they consider potentially spinning off in some way, separating their Europe business from their core US business. And what that would do is it would probably unlock some value in the Europe business, because right now the Europe business is really small relative to the whole business. So it doesn't move the needle substantially in terms of growth, but it has much higher growth potential because there's just so much more opportunity in Europe right now. It's much more of a fragmented market. And so if they were to spin that off, it would be highlighted as a high growth REIT and could enjoy a much higher multiple. Whereas their core business is more of a steady, slow grower. But it has a 5% dividend yield that's very well covered by cash flows, has an A- credit rating, one of the highest in the REIT sector, has high percentage of investment grade counterparties paying leases, so it makes it very recession resistant. broadly diversified portfolio, very well proven track record, long-term excellent performance. So again, if you just want to sleep well at night, mid-single digit real estate empire, O is a great buy. Realty income, ticker symbol O. And again, there are potential catalysts like spinning off the European business. If they went that route. If not, they still should enjoy that nice growth. And so I think that O should be able to not only pay that nice dividend, but grow it at a rate that meets or beats inflation for years to come. Okay, the third dividend aristocrat that I really like right now is Exxon Mobil. Now, Exxon Mobil isn't the cheapest energy production play, and there are some that I like more, but they're not dividend aristocrats. And if you want one that has the proven track record of XOM in a very cyclical business, because energy prices have been extremely volatile, that really speaks highly of XOM's management, their balance sheet management. Something else I like a lot about XOM right now is that while some of their peers have kind of gotten into trying to be environmentally conscious and moving out of their areas of competency in order to try to appease the ESG crowd, etc., XOM has maintained laser focus on its core business, its oil and gas business. Now, this isn't a comment on whether renewable energy is worthwhile. I actually am invested in some renewable energy businesses. And again, I understand that's a divisive issue, both from a scientific standpoint as well as a political standpoint. I'm not here to make a statement about that. My focus is simply saying that I think XOM as an oil and gas E&P company, exploration and production company, is doing its shareholders a service by remaining focused on what its core competency is. And so that's what I like about XOM. When you combine that with its strong balance sheet, its well diversified and high quality assets, I think, again, it's going to be a stalwart in the E&P play. If you have a bullish long-term outlook on oil and gas, which you should because of growing energy demand for AI, global development, etc., I think that XOM has a bright future, and I think it will continue to grow its dividend for years to come. So there you have it. You have some good opportunities in infrastructure play in EPD, a real estate play in O, and a energy producer like XOM that could be a nice inflation hedge over the long term. All of these are dividend growth machines with attractive yields. Again, if you're looking for dividend aristocrats, there are a lot out there that are pretty attractive. These are three that I like particularly right now. And certainly they don't have to be all you hold. Most of my holdings are not dividend aristocrats, but these are three that I think will serve you well. So if you like the video, again, give it a thumbs up, subscribe to my channel. Let me know in the comments below what dividend aristocrats you like right now. Thank you very much. See you next time.